Welcome to Energy Unplugged, the go-to podcast focusing on the global energy transition. My name is Thaddäus and I'm one of Aurora's project leaders based in Berlin. Today I have the pleasure of welcoming Steffen Schülzchen and Eva Zimmermann, and we will discuss the current state and outlook of batteries in the German electricity market. Steffen is the founder and CEO of Entrix. He has a background in business administration and worked as a consultant as the energy practice of McKinsey Company prior to founding Entrix. Entrix provides AI-based trading and optimization services for flexible energy assets, such as grid-scale batteries or virtual power plants. To date, Entrix has several hundred megawatts of flexibility under management. The team is based in Munich, Germany, and offers its services especially in Germany, but also other European countries. Welcome, Steffen.
Hi, pleasure to be here.
And then to Eva Zimmermann, on the other hand, she is leading Aurora's pan-European analysis on batteries and flexible energy and authored Aurora's battery market attractiveness report. She has built Aurora's battery modeling and developed Aurora's flex offering in Germany, the Netherlands, and Belgium. Welcome, Eva.
Thanks, Ted.
All right, let's dive into this. First of all, I'd like to hear your reflections on why to talk about batteries at all. Why are they important for Germany's energy transition? And connected to this, how does battery trading work in Germany? Eva, could you enlighten us, please?
Yes, I'm very happy to do so. Yes, so if we take a step back and think about the energy transition, there are three things happening. We do have an increase in renewable energy sources. We do have a decrease in thermal dispatchable power. And overall, we do have an increase in power demand because we electrify more and more sectors in order to decarbonize them. And all of these three developments directly impact the need for flexibility in the power system. The reason is that renewables are intermittent, right? You can't switch on the sun on and off. In the end, you are dependent on when the wind is blowing, when the sun is shining. The flexibility leaves the system with the thermal power, so the parts of the power system that could have provided this flexibility traditionally are leaving the system. And given that we have more demand on the system, we also need more flexible energy to do all the balancing, right? It's not like we need more proportionally, but because of the demand, but overall we just need more of it. So all these three developments really point to the focal thing that we need flexibility in the power system, and batteries, especially lithium-ion batteries, are actually a well-established and economically viable technology that can provide all this flexibility and solve a lot of issues that we face with having energy transition and all these developments.
Thanks, Eva. And Steffen, what do you think about the current state of the energy transition and the role that batteries play in it at the moment? How do they participate in the markets? How do they, as Eva said, make their business case in the current market environment?
Yeah, sure. Happy to shed some light on it. I think, first of all, what Eva said is obviously to the point. I think what I always find interesting is also to think where we stand currently with regards to how far we have progressed in the energy transition. You know, we've been talking about this for a quarter of a century or so, at least in Germany, but also other parts of the world. But still, if we look at how much more renewables we need, how much electrification still needs to be done, it sometimes feels that we are still in the early steps of the energy transition, and hence even more so in the early steps of the flexibility transition, if one wants to put it that way. Because those markets are just picking up speed, and whoever reads the Aurora reports understands quite quickly that we are now in Germany, I think, at a bit more than a gigawatt of installed batteries on the grid scale application side of things, and that is just a minor portion of what is modeled to be needed further down the road. Yeah, so I think that's important to keep in mind, that it's still a very, very nascent market, but at the same time, interestingly enough, and I think we'll be taking a bit of a German perspective here and every now and then looking into other countries as well. Interestingly enough, the German market at the same time is already quite developed for batteries, meaning that they tap into different kinds of revenue streams, that they can be financed on a fully merchant basis with debt on them, and all these kinds of things. To go a bit more specifically into how do batteries actually create value, it's indeed along the lines of what Eva said. So on the one hand side, we have the ancillary services. Most specifically, in Germany, we have the control energy markets, namely the FCR market and the AFR market. Their purpose basically is to balance out frequency deviations that we see in the system. And then the other major revenue stream bucket that we have is the so-called arbitrage trading, where we see the day ahead and the intraday markets, where you basically buy energy when it's cheap, or for delivery when it's cheap, and then you sell it again for a delivery period where it's more expensive. And in between, obviously, the energy has been stored in a battery. Yeah, so that's very intuitive. What we do not have in Germany, at least, that's a bit different to other countries, is that we have an active imbalance trading. Yeah, so that's, for example, different to the UK, where batteries can also participate in imbalance trading. That's not allowed in Germany, at least. Yeah, no, it's not allowed in Germany. When you combine it with renewables, there's some stuff how you can use batteries also for avoiding imbalance costs, but in principle, batteries do not participate in imbalance trading. And what I personally find very interesting about all of this is that those products that we are talking about are quite different across a variety of dimensions. Yeah, so for example, one of the dimensions is when do you actually have to bid for them? For the FCR market, you have to bid the morning prior to delivery. So that happens at 8 a.m. Then an hour later, you bid into the AFR capacity market. Then 3 hours later, you bid into the day ahead market. Another 3 or 4 hours later, you bid in the intraday auction. Then a couple of hours later, you can start being active in the continuous intraday market. So you have to make decisions at different moments of time, but you can only sell every piece of battery only once, right? So you have to make decisions under a high degree of uncertainty. The delivery period of these products is quite different. The ancillary services products are typically having a 4-hour duration, with the exception of the AFR energy market, which is 15 minutes. The day ahead market typically trades in 1-hour products. The continuous intraday market, again, in 15-minute windows. You have different ways of how the auctions clear. Yeah, so sometimes you have a pay-as-bid scheme. Sometimes you have a pay-as-clear scheme. For some products, you can only bid once. For other products, you can participate in continuous trading, and that somewhat underlines that there's a very broad variety of how you can actually work with the battery, and that it's an extremely complex system where on a given day you can bid a battery into more than 300 different contracts, and that's why you need technology for it to really make a difference and to understand what's the best possible use of it. Yeah,
makes total sense. Thanks for the explanation and the overview. Maybe to stick a bit to what you said about the different markets. Just roughly, if you have a battery in operation nowadays, what is roughly the share of revenues from the different markets that you see while trading?
Yeah, that obviously depends a lot on the configuration of the battery, both in terms of overall size that you have. And in terms of duration. Yeah, so duration is basically the ratio between how much power do you have and how many battery packs have you put behind that particular grid connection. In principle, the way that we look at it is that also the AFR energy market we somewhat consider to be an arbitrage market because it works similarly with the battery as an intraday trading. So what we see right now, very roughly speaking, that changes at a high frequency is 2/3 of it of the revenues roughly coming from energy-driven markets, so AFR energy, day ahead and intraday, and the other third coming from AFR capacity and the FCR market.
Interesting. Thank you. We talked about the fact that batteries can, first of all, participate in markets where you have one bid and then you get cleared or you get not cleared. But there is also the opportunity to participate in markets that are continuously trading. Eva, can you maybe explain a little bit further what that means or what the most interesting markets are in that sense, where you can bid in continuously?
Yes, I think continuous intraday trading is the key word. And I think as Steffen can only agree if I say this is also what makes especially the German market super interesting, because the intraday market there is very liquid. So this continuous trading actually works, whereas in other markets it would be a bit harder. But to take a step back, what does it mean? Continuous trading means that I can trade the several product several times virtually without actually physically charging and discharging the battery. So sounds like magic, but it's actually not, right? So by the simple example, there's a product for, let's say, the quarter hour between 1 and 1:15 on the intraday market. And you can sell this product in the morning at 8 a.m. and you can buy it back in the morning at 9 a.m. and then you can sell it again at 10 a.m. and so on and so on. You can do that several times. And with every selling and buying, you can actually arbitrage and make some revenue from every sale. So it means you have made quite a bit of revenue until you finally come to the point of delivery without having had any physical dispatch. It's just virtual. And this is quite interesting, of course, from a economic point of view. Steffen can probably agree that this makes quite a bit of the batteries revenue if it's optimized on the German market as of today. But I also think it illustrates really well how batteries are the final puzzle in the energy transition, or maybe not the final puzzle, but an important puzzle in the energy transition. Because the reason you need to trade again and again and again on the intraday market, and you have so many different offers coming in, is that with more and more renewables on the system, you have more uncertainty. You do have forecasting errors. You might have larger deviations in demand. So the closer you get to actually delivering power, the more you fine-tune what you actually buy and sell. And this is done on the intraday market. And if batteries provide their service on the continuous intraday market, they actually help to do this process more efficient and with less costs than if batteries wouldn't take advantage of this continuous trading. So it's actually really great because batteries can make a lot of money with that. And at the same time, it really helps to keep the overall costs down.
Yeah, Steffen, I mean, we heard that from Eva now that you can trade one specific quarter hour throughout the day multiple times. Is there any metric that you could name or order of magnitude? How often would you trade one specific quarter hour or 1 megawatt hour throughout the day?
Yeah, so I fully agree with what Eva said, and indeed, it's this is making up the majority of the trading volume. So if you look at the volume aspect, what we do at Entrix, most of the time we have roughly 90 to 95% of the trades that we do actually get opened and then closed again through exactly that behavior that Eva explained, that there are movements in the markets and the battery basically automatically picks the best possible opportunity where it can deliver the value, and also by being able to adjust to changing circumstances, it really does help the system. Yeah, so for us, it's roughly 90 to 95% of the trading volumes that are done virtually, as we call it, virtual cycling.
Yeah. Okay. Very, very interesting. That's quite a lot. And coming back to the strategy of actually trading, opening and closing these positions. I said earlier that you are doing this based on an AI algorithm, but how does it actually work? Are there fixed strategies that are applied, or is it changing throughout the day depending on different patterns in the markets? What are you looking at when determining the trading strategy for a specific battery throughout the day?
Yeah. So of course, in the end, overall, this is extremely dynamic, right? Because I think the example that Eva just gave clearly underlines how fast things are moving. So there's not the silver bullet where you just say, okay, every day I just trade 10 times the 12 p.m. contract and 15 times the 3 p.m. contract, and then I'm done, right? All of this changes quite a bit. So within a given day, you have to adjust frequently and dynamically, opportunistically, kind of based on the kind of new information that you see coming into the market. Also, between days, things do differ, and even seasonal effects do differ quite a bit. And I think that is actually very interesting that this entire structure is changing at a fairly high speed. And for example, we saw in 2023 that the prices on the ancillary service markets, especially for FCR, went down by quite a bit in the second quarter. This year now in 2024, we see the exact opposite. Yeah, against all conventional wisdom, everyone said, yeah, FCR is going to saturate and prices are going down and so on and so forth. As a matter of fact, the opposite kind of happened. Yeah, so I think that is the interesting part about trading and marketing batteries, that all of this changes at rapid speed and sometimes also differently than one would have expected that it would develop. At the same time, of course, there are some structures and skeletons that are being used at a frequent basis, right? So I think we sometimes describe that as the combination of human and artificial intelligence, the overall skeleton and the overall logics and the trade-offs that you need to make between the different markets. Those logics somewhat hold, but then on every day, kind of the trade-off prices and the opportunity cost and so on that you see for the different revenue streams, they change, and based on this, then the dispatch schedule changes a bit. We should actually do an analysis if we have ever seen a schedule that looked exactly the same as on a different day. We have never done this before, but it could probably be somewhat like a DNA for days that you see different trading patterns that don't repeat as easily.
Cool. Thank you both to kind of going into the status quo of what is happening now and how that ties into the energy transition that we are seeing in Germany. What I would like to talk about next is actually the outlook on the future a little bit and how revenue streams will develop in the future. And how this impacts, for example, how you're trading, or if you're considering that at all. I mean, you already mentioned that it is fast-paced, so I guess you have to adapt anyways every day. But curious to learn and to understand, first of all, from you, Eva, how do you see the markets developing, and then also from Steffen, how you would be adapting to that?
Yeah, great. Very happy to start here. Yeah, I mean, as Steffen mentioned, it's all super dynamic. No days like the other, no quarters like the other. And we will always see each of the markets up and downwards movements that are also sometimes driven by non-fundamental factors. However, I think if you speak generally about what is happening on the long run, in the sense what is happening in the next 2, 3, 5, 10, 20 years, I think there are some general trends we can be rather certain about, even though there will always be days that will be the exception that in the end proves the rule. I think one important point is that ancillary services, we are expecting to saturate quite a bit. So this would be the AFRR and also the FCR, who just had a short revival recently, but we would expect these services in the future to saturate and for revenues to be more concentrated on wholesale markets, so mostly intraday trading, a bit of day-ahead trading for the typical battery revenue stack. That being said, a saturated market doesn't mean that it's not completely, that it can be completely ignored, right? There's still some value you can get from the market. Also, some of these markets are helpful for the battery in other ways, in the sense that they don't degrade the battery a lot while still providing a bit of revenue in case of the FCR. So the revenue will definitely shift towards wholesale trading, but ancillary services will keep playing a role, even though it will be quite a small one.
Thank you. And Steffen, what is your take on this?
Yeah, I think in principle I agree. Maybe I was one of them who also said that the saturation of the ancillary services markets will come rather sooner than later. And I think the one thing that we indeed saw now in the second quarter of 2024 is, as I mentioned before, that the prices are increasing. And I'm curious how long that revival of the ancillary service markets will actually persist. Because I think, yes, there is saturation in the sense of we put more supply in the system, but the nature of that supply is also very different. And if we talk about batteries again, batteries do not bid into the ancillary services at their marginal cost. They bid into the ancillary services at their opportunity cost, which means that de facto, if I have periods of time where I see large spreads on the wholesale markets, that is a very high opportunity cost for batteries to participate in the ancillary services. Hence, they will bit high prices, and that might actually move the merit order a bit to higher prices. So on this, I'm curious how that will develop. I could imagine that ancillary services will stay out there for a bit longer than we think. But in principle, I'm fully with you, Eva, that the fundamental market that will drive batteries in the long run is on the trading side of things. Plus, then there will probably also be a couple of other revenue streams that are right now still under, let's call it, a higher degree of regulatory uncertainty on how exactly they will be designed. But I think there will be a couple of markets coming up, especially for very large batteries, so 100 megawatts and larger, that will also play a role. The question is to which extent they play a role in the day-to-day optimization, because some of them are contracted more in the long run. But I would say this is the long-term development that we currently see.
Yeah, and especially on the saturation of ancillary services. Sometimes I talk to people and they mention that the FCR should be fully saturated because it is, even if you export FCR, 700 megawatt, but we already have well above 1 gigawatt of batteries in Germany, and they wonder why it's not saturated. But it's exactly the point that you're mentioning, that batteries do have opportunity costs. So 700 megawatt of battery don't saturate a 700 megawatt market. You basically need to, first of all, add up all the possible ancillary markets to get a feeling, at least for the depth of the markets. But also you need to really, consider the opportunity costs and also the other revenue streams that will be coming in the future, right? Because they always also take away a bit of the capacities available to then bid into these ancillary services. So saturation is not as quick and easy as you might think.
Yeah, thank you. Great. I think that covered a lot how we see the revenue stacks today, and also underlined the importance of continuous intraday trading in the German market. What I would be curious to learn from you, Eva, is how you see Germany in comparison to other European countries. Is the revenue stack, and specifically maybe the continuous intraday trading, something that is particularly specific to the German market? Are there similar markets out there? Is it more attractive for Germany to have this set of the revenue stack, or how do you see it in comparison to other markets?
Very happy to answer. So I think one of the most identifying features of the German battery market compared to other European countries is that there is actually already a market. There is actually already an established industry. There are a lot of other players. Even though it's all really young and there are still typical issues you have if a whole new industry exists, it's quite different than in other European countries where no battery has actually been built yet, or just the first projects are being built. So from this point of view, if you think about starting a battery business in some part of the revenue stream in Germany, it's attractive because you don't start from ground zero, but there's actually something there already. You can also see that in the size of the participants of the conferences and how that grew over the last 3 years, basically. There is a full industry there, and I think this is something that really distinguishes Germany from other European countries. If we talk about the revenue stack, the first thing that comes to my mind comparing Germany to other countries is that it actually has quite a disadvantage, because in a German revenue stack you just have merchant revenues and no long-term contracted revenues. And in many other countries, this is something you have via capacity market revenues. And this has the advantage that even though you know you will make money with your battery through trading, it's not actually contracted yet, right? No one promises you that you will make good spreads, then you will get revenue through arbitrage or through ancillary services. Whereas if you have a capacity market contract, you have a contract that you will actually get paid regularly for providing the service of the battery. So this is a bit the downside for batteries in Germany. And I think, the point why is Germany still so successful in terms of batteries, and why did this industry establish here, is indeed on the one hand the intraday market. It's much more liquid and much bigger than in other countries. First of all, of course, due to the size of Germany and the power market, but also because the German intraday market serves a bit as a hub for intraday trading because it is so liquid for neighboring markets. So it's a bit of a reinforcing effect, right? Because you're trading on the German market because it is liquid. So you trade more on the German market and so on, and not on other markets. So I think this is some really advantage that the German market has over the other European markets, this established really liquid intraday market. On top of that, I think what is quite good for batteries is that they don't pay grid fees in Germany. Makes also quite a bit of a difference, especially when the business model of arbitrage becomes more important and ancillary services become less important. When services become less important. And I think what also creates quite a lot of trust in the German market is its sheer size. Not only because there's a lot of power demand in the country, but also because there's a lot of thermal capacity leaving the system. There is just massive amounts of gigawatts of renewables coming into the system that all need to be balanced out, that all need some sort of flexibility. And this combination, I think, makes it from the small technical details until the big picture just a really attractive market for batteries.
Thank you. And maybe looking in your direction, Steffen, would you agree with that assessment, or was it just pure coincidence that you started in Germany? And maybe what are other countries that are on your list to conquer next?
Maybe it was a bit coincidence that we started in Germany because we are Germans. So that was somewhat the natural way of doing it. No, but I think more precisely, I think the German market, when we started, was presenting a good window of opportunity with regards to where it was standing at that time a couple of years ago and how it developed since then. And because obviously the cycles for developing that solution, having projects that have to be built and so on and so forth, they are not unfortunately happening within weeks, but that's more an exercise of months and years. So one has to join a bit earlier than the actual ramp up happens, and I think the ramp up is exactly what we're starting to see now in Germany. Overall, I agree with Eva's assessment. I think what's interesting right now, just to go into a couple of specific markets, is indeed this notion of fixed revenues or long-term contracted revenues driving the attractiveness of markets. So if we, for example, look into Italy as one example, there the TSO Terna is about to start an auction where long-term revenues will be the outcome for asset owners. Hence, there's quite a rush right now of investors looking into the Italian market. For Spain, something similar might happen, not exactly similar. So it's not the same thing as the McKinsey scheme, but there's also discussion, for example, about a capacity market. In Poland, we have seen a capacity market where I think roughly 9 gigawatts or so, or a bit less. I hope you have the exact numbers. We can correct it afterwards. I'll put it in the notes. But quite some portion of batteries has already been awarded with capacity market revenues there. And I think that is indeed helping those markets quite a bit to start off. I'm not sure how to look at this because the German market, I think, as Eva mentioned, set a good example of how it can be done without long-term contracted revenues based on the fundamentals that we see. And all the countries that I just mentioned, from my perspective, also provide the right fundamentals for putting more flexibility in there. And I think sometimes would be good to invest based on these fundamentals and get things off the ground and not wait for the regulator to provide long-term securities, because that in the end reduces maybe the innovative spirit to some extent and reduces speed. But let's see. And I think it's those investments are major, so it's also somewhat of a natural thing to do. But as I said, I think Italy, Spain, Poland, those are very interesting markets. And then obviously we also see developments in the Nordics, in Benelux, in Eastern Europe. But they are in different, in different stages of maturity and development. Right now, I would probably be mostly looking deeper into Italy, Spain, and Poland.
Thanks. Yeah, very, very interesting. One other point I would like to touch on is actually going a little bit more into your core business, Steffen. Because I would imagine that, you talked about the complexity of trading a battery and the processes that are in place, and also the delivery deadlines and everything. So I would imagine that going forward, more and more batteries that are operated in the market would rely on people like you, independent trading companies like Entrix, that are actually managing their assets, or at least having an algorithmic based trading scheme, so they don't have to monitor all the markets every time and the whole time throughout the day. But there might also be conflicting interests, right? If you're operating the batteries of different clients, and then there's a question of what client actually does get to bid into a very low volume of continuous intraday trading that you are seeing in the market, and who does get the revenue for that. Can you maybe elaborate on how you are managing these conflicting interests when you are operating kind of a fleet of batteries?
Yeah, sure. After all, we try to avoid conflicts in the first place as good as we possibly can by de facto, or not de facto, like this is really what we do. Every battery and every asset that we run is being run on an independent optimization, because also these batteries do differ. For example, I mentioned before in terms of size and duration, in terms of also exact hardware parameters, warranty parameters, and these kinds of things. So even under the same market circumstances, the optimization might come out with different results of what would be best for a particular asset to do at a given moment of time compared to another asset. So that's just important to keep in the back of the mind. But obviously, if we were to see extremely attractive prices, either on the buy or the sell side, obviously all the batteries from the fleet would like to tap into these revenues. What we indeed have to do is that we more or less have one layer in between where we aggregate the results from all the individual optimizations. So each and every asset, as mentioned, is optimized individually. It's then added on one layer because we, of course, also only have one market access at Apex. We cannot just have 20 market accesses for 20 different batteries at Apex. So we have to aggregate this up. And then this aggregation is brought to the market. Then we get a certain result. And because we have this aggregation layer, we can then, of course, also see what is the respective contribution of the individual asset to that particular trade. And then they basically get the benefit from this on a prorated basis. So there's actually not that much of a conflict of interest or so that we have between different assets, but we really have the ability to trace back the decision and dispatch behavior for every single asset vis-a-vis the market. And as you mentioned, it's mostly a challenge on the continuous intraday market. For things like ancillary services and so on, it's even easier kind of because there you can more or less still bid as individual assets into the market.
Yeah, understood. Makes sense. Cool. Thanks for the insight. Maybe coming or going a little bit away from grid scale batteries and looking into behind the meter batteries / decentralized flexibilities like EVs as well. Can you apply the same set of algorithms for these technologies, or is it something completely different that you are optimizing there?
Yeah, both. So I think one has to separate a bit between the different challenges that you're facing there. So the one part that is very similar to what we see on the grid scale side of things, we have so far only spoken about flexibility in a somewhat standalone setting. We didn't talk so much about co-location, but let's just assume we talk about grid scale, including co-location, about where we then also have renewable generation and load in there. Then having a virtual power plant, for example, made up of EVs or of residential homes. Once I've aggregated this up, it looks pretty similar like a co-located grid scale project. So what we can still do then as Entrix is that we kind of take this aggregate a virtual power plant, we optimize it, we get certain results from the market, and then it can be fed back into these assets. But this feeding back part, that is the second challenge, and there obviously the algorithms differ, because you in a virtual power plant, and we do that, for example, for Enpal, who is the largest provider of solar roofs for residential homes in Germany. What we do for them is that we also build this entire middle layer, where it's really about, hey, how do I aggregate all those individual households who all have a PV panel, battery in their basement, a wall box for charging the car, and a heat pump, and so on. How do I aggregate them up in the best possible and fairest way to then get to this one virtual power plant that we as Entrix can optimize? And then after I've optimized it, how do I distribute the dispatch to the different households? Yeah, and I think it already sounds complicated, but when you start working on this, you understand how complicated it really is, because there are basically 10, 20 more layers of complexity behind this. And because you obviously then also have to start controlling for individual household behavior, because people, they say that they maybe would keep their car connected on the wall box until 8 a.m., but they disconnect it a bit earlier. Grid charges are slightly different. People want to have different heats in their houses. Maybe they're on vacation, and all of this you don't really know in advance. Yeah. So with all this uncertainty, you kind of have to deal, and that is then, as said, an entire different set of algorithms and intelligence that you have to bring to the game in order to make the most flexibility available. That's what this part is about. Yeah? One part is this part that I just described is about how do I get maximum amount of flexibility, and then the other part is how do I get the maximum value of that flexibility.
Yeah, thank you. Very interesting. Very interesting excursus. Cool. I think we are about to close up this session, but before I let you go, the both of you, I would maybe ask you about your take, and maybe you can have a quick answer here on the upcoming planned capacity market in Germany and its impact on batteries. Do you think it's an upside, or is it a downside? Maybe Eva, you can start.
I'll keep it quick. I think it's an upside. I think the long-term contracted revenue can reduce the risk and the uncertainty. I think more actually than it can stop innovation. And I think that's especially important because if you reduce the risk, you also reduce the cost of capital for financing a battery. And if I reduce the cost of capital, I think more batteries can be built, and the flexibility that the power system needs can be provided quicker and more cost efficient.
Thanks. Steffen, what's your take?
Yeah, I think obviously more revenue streams are always an upside. So, it's kind of a free option. At the same time, I'm not as enthusiastic about it because I think in Germany we don't need it as much. If we ask the grid operators, or if we were to ask the grid operators, if they see enough applications for batteries on their desks, I think all of them would say, yes, there are too many. We cannot tackle them all. So, yes, I think it helps, but at the same time, I think in Germany we have a bit the tendency to make these regulatory schemes extremely complicated, and now we are talking about somewhat of a hybrid setup with centralized and decentralized components and so on. And that is the part that gives me a bit of shivers almost, because we have the tendency in Germany to make everything very complicated, like Redispatch 2.0 and how exactly the Nutzen statt Abregeln regulation will look like. I forgot the exact paragraph. I think it's like 13K in the German Energy Act or something like this. And this already underlines how complicated we sometimes tend to make things. And yes, whilst it's supposed to give some extra form of certainty and value for batteries, and it actually might, for now, it actually delays investments into batteries because people are waiting for how exactly that scheme will look like. And we also have to be mindful of how that will be balanced out across or vis-a-vis other technologies that are also supposed to benefit from that capacity market. So obviously we need some form of solution for having those backup capacities available. At the same time, I think the devil is really in the detail of how exactly the regulation will be fleshed out. And on this, I'm right now a bit hesitant, but I'm very happy to be proven wrong. There wasn't a short answer, but the honest one.
Okay, thank you very much. Much appreciated. Okay. Thank you both for joining this podcast. It was lovely speaking to you. And I hope we'll see each other soon on another episode. Thank you.
Thanks, Ted. Thanks, Eva.
Thanks, Ted. Thanks, Steffen.
That was Thaddäus Kreisig, one of Aurora's project leaders based in Berlin, talking to Steffen Schülzchen, the founder and CEO of Entrix, and Eva Zimmermann, an associate in Aurora's research team. Thanks for listening to Energy Unplugged. Do keep an eye on our podcast feed for more in-depth conversations with senior members of the energy industry. The best way to do this is to follow or subscribe to the podcast via whatever platform you use.